And we have Jane on the line also from Sydney. Jane.
Yes, hi. Could you please advise when buying a property whether it's better to look for a negatively geared property or positively geared property, and what are the pros and cons of both?
Okay, and before we answer the question, we probably should establish what the difference is between the two of them. And gearing relates to your level of borrowing rather than the outcome in terms of its cash flow. So to say is it positively geared or negatively geared depends on a number of things, including the size of the loan and the yield that you're going to get, and whether you actually have money left over at the end of each week after you get the rent and pay the costs, or whether you don't. So understand that the term gearing relates to borrowing, and whether it's negative or positive relates to the resulting cash flow. Of course, you can negatively gear for a positive cash flow if you also have on-paper deductions on a property, such as depreciation on the fixtures and fittings, which give you back extra tax, and that helps you with your cash flow. Robert, I know you'd like to answer this question.
Yes, we could probably help Jane. Jane, when you're looking at negative gearing or positive cash flow, what you probably need to look at is that your biggest return on your investment primarily is the capital growth. So if you're looking to buy a property, let's say for example it's a unit, so it's costing you a little bit less to get in and your rate of return might be a bit greater. So chances like that is sometimes on a cheaper property, if you've got a good rate of return, you might end up getting a positively geared type of investment. Whereas if it's, say a larger property in a better area with probably a bigger block of ground, you might actually be negative gearing there because the maximum value component is in the land, and going forward you probably get your best capital growth in the land. That's a general rule of thumb in regards to when you're buying a property, if you're going to be in a negative gearing position or a positive cash flow position. But if you're looking at primarily a rate of return which indefinitely gives you the best result, you need to take both into consideration, which is your rental factor and your capital growth. But what you'll probably find is your biggest gain is normally in your land content. And your land content, if you can afford to keep the property, that is, make up the difference in the difference of your negative gearing that you might be sort of having a shortfall with initially, you'll probably find ultimately that your best rate of return is in the capital growth of the property, not primarily just the current positive cash flow.
And having said that, Robert, it's interesting that they all grew.
Yeah, they've all grown, but it's off a lower base. So therefore, when they're growing off a lower base, the rate of return as a percentage-wise might be greater. What I was trying to get at is long-term, if you can afford to buy a more expensive property today, it's probably more expensive for a particular reason because it's more desirable. Some properties of recent times, and we're talking the last, say, 4 or 5 years, say post 03 or 04, some of those properties, the cheaper ones, have actually performed better only because of the affordability factor for those particular properties.
Okay.